So, good evening to all the alumni of PSG College of Technology and sister institutions. Am I audible? Sir, Shanmugam sir?
Yes,
Yes,
you are audible.
yes.
So, good evening, friends, alumnus. So, it's a very nice evening to meet you all in this wonderful Q&A session. Particularly, investors group is a very active group in WhatsApp. So, they are exchanging a lot of information, tips for the investors community. And I have always thought that our technical people, PSG with engineering background, management background, they are all very good investors and they are seeing a lot of profits, spending a lot of time and taking investing as a passion to see the profits, particularly after the age of 50. We can see a lot of people involving in investing in shares, equities, bonds, apart from options and trading. So we thought that it is worthwhile to spend an evening with all our friends. In fact, our investors group is one of the very active groups among all the alumnus. And we see a lot of activity as well as knowledge sharing on many of our platforms. In fact, for a AGM meeting, there was a lot of small groups talking about investing and startups and going for equities, etc. So it is worthwhile, and particularly the present trend among all the alumnus and technical people is to go for early retirement. So particularly software industry, nariya youngsters, they're all involved. And once they reach 40, 45 years, neither the company wants you, nor you want to work with the company. So in that case, we see equities and shares or investing in equities becoming a, say, senior job or a pastime or a passion for all the senior people or senior alumnus. And that is why we thought we must bring this for all the people to enjoy or to have a knowledge sharing session with two of our experts. So the two of our experts, I think, hope they are joining, and they have already joined, Mr. Shanmugam and Mr. Natarajan. So both of them have started this group and WhatsApp group, and there are a lot of knowledge sharing. So our PhD college nariya per vandu directors as well as top people irukanga. அவங்களும் வந்து நிறைய ஷேர் மார்க்கெட்ல ஈக்விட்டிஸ்ல இன்வால்வ் ஆயிருக்காங்க. And when we meet, they say so many things, how they have brought the company to such a high level. In fact, you can see a lot of alumnus going for IPs. So அதாவது வந்து ஷேர் மார்க்கெட்ல they want to go for investing, shareholders from the public. So that is the scenario. So we will have a short video of our alumni association, and then we will start off with introduction of the expert, and then the experts will take for a few minutes, and then we will have the question and answer session. Many participants have a lot of questions, so we will have a few questions in the end. So this is the agenda for today's meeting. So I welcome all the participants, alumni, their own children. In fact, இப்போ வந்து செகண்ட் ஜெனரேஷன் பீப்புள், அதாவது சில்ட்ரன் எல்லாம் வந்து நிறைய இன்வெஸ்ட்மெண்ட் பண்றாங்க, பர்டிகுலர்லி யங்ஸ்டர்ஸ் they are investing a lot. In fact, because their needs are taken care, they seem to invest a lot of money. And in the crypto shares, youngsters, a lot of people are investing. I don't know what will be happening. So we'll have all these questions asked to our experts. So I welcome all, one and all, present here in this online meeting. And shortly we'll have the video. Ravi, we can play the video now. So that was okay. So that was the introduction of our alumni association, and about all the events that have been taken place for the last year, 1 year, last year, another winter. I think after AGM we are meeting with this meeting, online meeting, and hope you all enjoyed the video. So one disclaimer on the see, whatever we talk here is only our own recommendation, and it has not been fully rectified. It is only the opinion of the expert. So either vechi yarum share alladu iduvo, I mean, we disclaim the responsibility that whatever you take your own decision. So this is only a information session and purely not advisory, neither the recommendation. இப்போ இவங்க நம்ம எக்ஸ்பர்ட்ஸும் வந்து தே ஆர் நாட் வெரி ஜுன்ஜுன் வாலவோ அல்லது இவங்களோ கிடையாது. ஸோ தே ஹாவ் தேர் ஓன் ஒப்பீனியன் அண்ட் தே வுட் லைக் டு டெல் தேர் ஓன் ஒப்பீனியன், அண்ட் வி டிஸ்க்ளைம் எனி damages or whatever recommendation we give for future investments. So investments are their own. So let me start with the introduction of the experts. So I first introduced Natarajan Chokkalingam, 94-95 batch, software mechanical. He is alumnus, and he was working as an IT consultant. Still, later on, he has switched over to investment, and he is a novice still novice. He says he's a novice and trying to learn from mistakes in trading and investments. He started trading, investing with zero knowledge about stock market since 1996. He started disastrously with the IPO investment of Palpigo and failed ventures. Post 2000, he opened Demat account and started accounted with ICICI Direct and started trading, investing again, rather in a very immature way. But to buy and hold, he has gone for mutual fund in a short span of 15 to 20 days. During the year 2009, came to know about P&L. So, and the balance sheet, profit and loss statement, balance sheet analysis as one of the best way to invest, and tried that. It was successful somewhat. From 2013 onwards, he increased the capital slowly and invested money into shares and mutual funds and got lucky as it was an ideal period to start when markets were low. So small and mid-cap boom after 2013 helped in creating profits. When 2018 market peaked out, he redeemed all equity funds and moved to debt. So that was the trend at that time. 2014 onwards, started trading in options from Zerodha account with zero knowledge in options and made losses to the tune of few thousands every financial year till 2020. After controlling the greed, he paid payoff started, and market was kind enough to reward patience and calmness. His future plans is to control emotions, writing algorithm to automate forward and options trades. So that was his brief biodata. So our technical people have a very good logical sense and the cause and effect. So I think we are the apt person for investment analysis and doing investment. Our second expert is Mr. Shanmugam Perumal, 2004 ME production. He was ex-treasurer. AGM. He was a very active person and he is a current EC member. He has worked as a senior R&D specialist in FL Smith and he is currently pursuing PhD in IIT Madras. So he is a working professional. He is also doing PhD and still an investor, trying to learn from mistakes in investments. So with one of my good friends, with his friends and a lot of compulsion, he opened a Demat account in year 2005. And he remembers the friend and thanks him profusely. To start with, he lost money in Satyam share as an employee of Satyam at that time. So you know about Satyam, how Satyam Ventures, a profitable company, but still it went on for a toss. So he lost money in several stocks like Lanco Infras, JP Associates, Suzlon, Syntex, Plastics, Stampede Capital, Geetanjali Gems. So the list goes on. But he did not give up, learned from failures. Later, he started analyzing stocks before investing in it, both fundamentally and technically. He started reading several business newspapers, articles, and investments blogs. He started following big investors and their investment picks and built his own portfolio. So started buying fundamentally good stocks whenever there is a big fall. Started reading company balance sheets, annual reports, investor presentations, and started following global markets for futuristic sectors. He identified and invested in some good stocks like Tata Consumer, Tata Chemicals, Tata Motors, GNFC, Orient Green Power, Balaji Amines, Polyplex, Man Infra, All Cargo, Happy's Minds, etc. All these stocks gave 3 times or 5 times return and my portfolio became green. So he must be very happy at that point of time. At least now I am not making big investment mistakes. That is what his confession is. So invested in ELSS mutual fund for tax savings. Otherwise, his investments are in direct equity. He learned by patience, passion, perseverance. So in the 3 P's in Solvanga, patience, passion, and perseverance through investing in stocks. Passion to achieve big. in equity. Preserve perseverance to go until the last, and patience to see the background rather than to see the colorful things in front. Still, he is young and he has a long way to go. So we we invite him as an expert. So first question, sir. I hope Shanmugam sir.
Yeah, yes, sir.
Yes, sir. Yes,
yeah.
Thank you for the introduction.
Yeah.
Okay. So first question, முன்னாடி நீங்க ஏதாவது general outline நீங்க ஏதாவது சொல்றீங்களா Shanmugam sir?
Yeah, I just want to share one quote here, which is very appropriate. That is one of the famous inspirational quote from Warren Buffett. That is, if you don't find a way to make money while you sleep, you will work until you die. Okay. So this was inspirational quote for many investors, including me. It keeps on hitting my head several times. That's the reason I'm also into part of equity investment. So that's want to share before getting into the question and answer session.
Yeah. Sir, shall we go for the first question? Manish Ramakrishnan has asked, long-term, low-risk shares on the how to identify and how to invest.
So, yeah.
First question on you. Yeah.
Okay. Yeah. Good evening to all, and thank you, Chennai chapter, for giving this particular opportunity to interact with everybody. And before starting, again, Dina sir, alaga or disclaimer sonanga. So in addition, so my disclaimer is that, okay, whatever the stocks that I say or whatever mutual fund, so probably it might be a biased view. So I might have invested in that stock or mutual fund. So please research from your side and before taking any decision, because it is our money, your money or our money. So you need to research before investing in anything. Okay. So about the long-term and low risk, option. So there is nothing, there's no instrument in this world without any risk. Let us be very clear. Even if it is fixed deposit, okay, maximum 5 lakh is what it is insured. Say bank goes bankrupt, you put FD. So maximum, even if you had put invested 1 crore, so you will get maximum 5 lakh only. So there is nothing which is risk free. So there is always a risk. So the thing that you need to decide is which is, what is my profile or what is my financial stability? How do I go about it? Can I take more risk or can I take less risk? So while if you want to take low risk and also somewhat better investment, then you need to forego looking at small cap or mid cap, because they are highly risky. Okay, they may give a very good profit maybe in future. Okay, so if you hold for a long, probably when a small cap become mid cap or mid cap stock becomes a large cap. Okay, so ideal risk wise, if you see, large cap is a little less riskier compared to these two things. Then still you don't want to reduce the risk, because even a large cap also, it has got its own risk. Because for example, you invest money in say HDFC Bank. So if you see, HDFC Bank has actually not moved much in these last 2 years, while there are many other stocks which have moved say at least 30, 40, 50%. So there is always a risk. So to reduce the risk, you can go for ETF. Okay, exchange traded fund. Okay, so Nifty, it is called Nifty Bees. Okay, so it is a listed one. So it is it goes along with the Nifty. Okay, if Nifty moves up, this also moves in the same, it goes in tandem. So that is one of the better low risk investment. Still you want to reduce risk, then you should choose a debt fund. Okay, so these are the two options. Okay, I would say low risk and better investment.
Thank you, sir. Thank you. It's very nice. Hope Manish Ramakrishnan, we have answered him. So any participant, if they have any doubt, they can put on the question answer session. We will try to answer it in the end of the day, or in the WhatsApp group. So any questions for the participants, you can always add. So the next question, I think Shanmugam sir can take. Risk assessment of mid and small cap stocks. This is asked by Ramadurai SG 1974 batch mechanical. So he has asked, what is the risk assessment of mid and small cap stocks? I think Shanmugam sir, neenga answer panna mudiyuma?
Yes, yeah. Thank you for this question. It's a good question. In fact, many people will have this question when they pick mid or small cap stocks, because the small cap stocks tend to grow faster compared to the large cap. We all know. But at the same time, when something goes wrong, the same, it fall much higher rate than when it goes up. So it, at the same time, we lose profit more quickly also. So, and it is less proven because it is a speculative investment, and we have very less data compared to large caps, and the operation history also will not have much data. So typically there are always a risk, but how to mitigate the risk? If you look at it, I would say read the fundamentals of that company very much in detail. Clean balance sheet, the debt equity ratio should be less than 1. At least they should have some cash reserve, for further expansion. Some of the metrics like return on capital employed, return on equity, earning per share, price equity, valuation perspective, price equity ratio, how their sales are growing year on year, and how their sales are growing quarter on quarter. See, some people look at in year on year, but the market rewards only if QOQ improvement is there. If there is no QOQ improvement, again at the time of results it will start falling simultaneously. And also we have to look at the profit growth also, both in year on year as well as quarter on quarter. And some of the other factors like whether it has the potential to grow further, they have made any expansion, are they able to gain market share, is it a good management, capable management, and also we have to look at the liquidity of that particular stock. Very liquid, illiquid stock, if you invest, it will be like sometimes dead stock, right? We have to look at the volume of the stock in which it trades. And also never ever invest at one go. Okay, you have to put, we have to split the money into some portions. Invest 20%, 30% first. You should be ready to accept even 20% drawdown, and we should have the money to buy and average if it is a good stock. So these are all the factors we have to consider while investing in mid cap and small cap stocks.
Thank you, sir. That's a very nice answer. Next question, is it good to invest on blue chip shares or other shares? Blue chip கொஞ்சம் definition ஏதாவது clear-ஆ இருக்கா? எப்படி blue chip இல்ல blue chip போறது நல்லதா?
Yeah, so typically these Nifty 50 stocks are typically called as blue chip shares. Some of Infosys, TCS, ITC, this high market capital shares are called blue chip shares. It's again individual risk profile. If you are a very defensive investor, it's better to stick with blue chip shares, because whenever there is a big fall, if the events are related to global but not particular to that particular stock, it is a good opportunity to buy, because these blue chip stocks are more resilient. It will bounce back quickly and give decent returns when an index goes up. So it's always good idea when there is a big fall. If it is not relevant to that particular stock, it is always a good buy. When Rajan sir used to tell in our group, if 5-6% fall in Infosys or Tata Motors or any other good company, it is always an opportunity. When again index goes up, this is the stocks will bounce back quickly, right? So in quick period, you will get some 5 to 6% return, which nowhere you will get it easily, right? And coming to the other shares, again, my previous answers will help. When you invest mid cap and small cap stocks, you have to look at the balance sheet of that particular company in very detailed way, valuation wise, and the expansion potential for further growth, market share gain possibility. All these things we have to look at it, and always hold some cash for averaging in good stocks. And when you look at the mid cap and small cap, corporate governance is very important, right? If something, immediately CFO resigns, we know what will happen to that share. We all experienced it in the past. So while selecting mid cap and small caps, we need to be very, very cautious. But at the same time, if you are good at researching in a better way, you will get better returns compared to the blue chip shares.
ஸோ இந்த நெஸ்லே வந்து ப்ளூ சிப்பாக இதுவும் சார், சடனாக வந்து இந்த மேகி இதில் வந்து சடனாக லோவாக போய் திருப்பியும் இல்லை சார் நல்லா பவுன்ஸ் ஆகிடுச்சு. அது ஹவு டு யூ சே ப்ளூ சிப் ஆர் நாட்?
That's what, sir. Top 10 market capital shares, sir. Say, for example, TCS or Infosys, in ITC, or market leaders in that particular sector. So they are called as blue chip shares.
Good. Thank you, sir.
I will add one more point, especially related to Nestle, since you asked. So the Nestle Maggi issue came. So I'm not sure. I don't have the exact numbers. I mean, what is the impact? What was the impact? Okay, how much revenue actually Maggi generated? But because of a government stopping that particular product, the company is not going to close down. Okay, because they have a lot of other products. Okay, so just because one particular product, one small news, that created some negative sentiments, and if the stock is going down, that is the time to put money and buy the stock. Okay, so Nestle blue chip is basically a highly reliable company. So Nestle is a reliable company, and they have Nestle have a lot of products that are catering to kids. Okay, so those you cannot start another factory and start manufacturing those foods, okay, for toddlers and for baby foods, okay, because there are a lot of regulations, and I think now the regulation prohibit any new industry starting those kind of things. So Nestle is not going to run away. Nestle is not going to close their shop just because one particular product got banned. Okay, so these are the opportunities. If there's a good company, and when such negative news comes, just analyze, and is it going to impact the company? Is the company going to shut down tomorrow because of this news? If your answer is no, then that is the time to just put in money. Small quantities to start buying. Okay, it will reach some bottom, and people retail or people with ill-informed or with zero knowledge. Okay, what they will do is that they'll in panic, they will just sell and they will just get out. Okay, so that is the time when big institutions will come and will just buy those shares, and we retail investors, okay, we will buy it high and sell low, especially when during such panic condition, and we lose. But the institutions, they pump in money when the stock reaches at the lowest point. So we should always look for such news and pump in money for good company. So if it is a small cap and such news comes, then we don't know. So I'm not talking about applying the same strategy there, but for blue chip company, these kind of negative news should be taken as a positive one for investing. Thank you.
Thank you, Natarajan. That was a very nice rejoinder. அதாவது வந்து கொஞ்சம் ஆட் பண்ணி சொன்னீங்க. உங்களுக்கு தான் அப்போ அடுத்த கொஸ்டின் வந்து சிதம்பரம் முத்தரசன், இப்போ வந்து மார்க்கெட் will it go down due to recession அப்படின்னு கேட்டிருக்காரு. I think he is predicting recession. I don't know.
Yeah. I don't know. Nobody can predict anything. Okay, nobody can predict recession. In 2008, also nobody predicted that recession is going to come. Only one, at least as far as I know, if you watch Big Shots movie, there is one Dr. Michael Burry. So it's a real character. Okay, he could foresee that. Okay, because of subprime crisis, where people or the institutions, financial institutions, they were giving loan to anybody and everybody, and they are securitizing, and they were just selling that as some share to some other company. So at one what they were doing is that they were giving loan at very high interest. Okay, they did not do a background check, and whether this person, okay, who's getting a loan from us, whether can he repay. So those kind of background check was not done. They're just selling this loan. Okay, and those who got this loan, they were not able to pay, okay, after say 6 months or 1 year, and foreclosures started coming, and there are many mortgages payment got stopped. So a lot of crisis that was happening, and Dr. Michael Burry was actually collecting all these data, and he was having some indicator, and it was slowly rising, these foreclosure issues. Okay, so he started taking an insurance kind of option, F&O kind of thing. So where he's betting against this particular insurance or this loan products. Okay, so if the bank, the institutions fail, then he's going to gain a lot of money. So that is how he did, and he made a huge money, say probably 200-300 millions or more, if I'm correct. Okay, I don't have the exact figure. So nobody at that time predicted. Those who predicted, there is nothing called as prediction. So those who said recession, so they only said, okay, recession has come when actually the market recovered. Say, for example, if you, I was in working in Wipro Technology, and I remember very well 2009, I think February or January, I don't remember exact month, where Premji used to, address employees every quarter. So he was telling that I met a lot of Fortune 500 CEOs, okay, and they said that, okay, the recession was so deep, nobody could predict, and nobody knows, okay, when, it is actually going to, come back, or it is going to reverse. So we are going to take some tough decisions. Okay, these are the word that he had used. Then the tough decision means, okay, we will be laying off a lot of people. Okay, so from March or April onwards, okay, they started slowly laying off people. But nobody, they did not understand, or even Premji could not predict at the time that, okay, it was actually market was, okay, coming back. It was taking a reverse. Okay, and those who were checked out, they immediately they were picked up by CTS. Okay, so retail, Wipro had a lot of retail clients, say Target and Best Buy, and so many. So what happened was the experts from who were working in that particular account, they moved to CTS. So suddenly within a quarter, things changed. Okay, CTS picked up everybody who were laid off, and then Wipro lost in finance and retail domain, things like that. Okay, so nobody can predict. In simple, nobody can predict a recession, whether it is going to come or not. So best thing is that when people are pessimistic, and when they are, giving a lot of, say, especially the analysts and experts, they are giving a lot of negative information. That is the time to just plunge into the market and buy the shares. Okay, so don't put a lump sum money. Okay, just buy in small quantities, because we don't know. Okay, nobody can predict the bottom or top. Okay, so buy in small quantity. If I have, say, 1 lakh, let me buy 5,000. Okay, and next week another 5,000. It's like that. Okay, so just buy slowly, and that is the only time. Okay, if you buy, you will get very good rate. Even if you're a trader, I can assure you that, okay, such kind of condition you can make at least 10% in a quarter. Okay, in 1 or 2 months, definitely you can make 10%. If you're a long-term investor, that is a different story. Okay, you can just buy at low and sell high. Thank you.
Thank you, Natarajan. அதாவது வந்து எப்படி சொல்றதுன்றே தெரியல. அதாவது வந்து we have to be really close to the market. எல்லாரும் ரிசர்ச் சொல்லும் போது நம்ம வந்து ஒரு இதுவா சான்ஸ் எடுத்து we have to do it. Very nicely explained by you and particularly இது. அடுத்த கொஸ்டின் வந்து உங்களுக்கு இதே வருது. Which is a better mutual fund, SIP or fixed deposit or gold bonds? இது யார் கேட்டிருக்காங்கன்னா 1992 மது.
Okay.
So I think he is listening.
Yeah. Okay. So, okay, it's a good question. I mean, many have this doubt. Can you repeat question once again?
Which is better mutual fund, SIP or fixed deposit or gold bonds? I want risk-free 12% return per year.
Okay. So again, I already answered a part of the question. There is nothing called as risk-free in this world. So everything has got its own risk. So FD, we know, okay, it gives pathetic returns. So it is less riskier compared to all other instruments. Okay. So then you after FD, okay, what is one other instrument that can be okay, little riskier, but better than this one. So better than FD. So then probably you can choose bonds. Okay, right now there is something called a senior secured bond. Okay, so you can research in YouTube. So what is senior secured bond? Okay, it's better secured way compared to a bond. This is better. Okay, and then you move up and you can choose debt fund. Okay, and so in debt fund also there are a lot of things that are available, and you can go into value research online or moneycontrol.com. There are so many sites, okay, which gives a lot of information, and it gives 5-year or 10-year data or 15-year data. Okay, so you can choose that. Then above that comes the equity investment. So equity investments are very, very riskier, and 12% means even there is no guarantee that okay you will get such kind of return in equity funds. I will just quickly show one table here. Okay, I'll just share the screen for a moment. Just give me a second. Is there any option to okay sharing? Okay, I'm sharing the screen. So is it the screen visible?
Oh, yes, sir.
Okay, fine. Okay, so you can see the large. Okay, these are the categories. Okay, equity, debt, hybrid, and commodities. Okay, and so you can see 10 years. Let us. Investment. You say investment, it has to be long term only. So let us assume that okay, we are investing for wealth creation and at least for 10 years. Okay, so you can see for large cap. It gives this is yearly annual return of say 12%. Okay, mutual fund. This is an average one, so individual funds may be more or less. Okay, that is a different thing. Okay, and large and mid cap. So this has given better return, 15%. Okay, and debt. Okay, debt mutual fund, they have given around 7%. Okay, and hybrid fund. So hybrid fund, it invests both in debt as well as equity. Okay, this is again a better one if you don't want to take much of risk. Also, I want better return. So for those people, okay, who are say probably above 40, 50, so they can go for this kind of thing. Okay, and gold, you can see. In 5 years it has given 10, but if you consider 10 years, okay, it's just 3.73. See, in short term, see gold, okay, it is giving a negative return. So better to avoid gold. Okay, so either you can go for large cap. Again, understand the risk. Okay, there is a huge risk involved here. So in the equity or in the mutual fund space, you want to reduce risk and also want to have a better return. Then there is a hybrid funds which are available. So you can choose this one, but there is nothing called as no risk fund. Okay, everything is risk here. Please understand. Thank you.
Thank you, Natarajan sir. I think another question, our Navodaya Krishnan sir, 1977 civil. So he is asked, I think, yeah, let us have a description of various types of mutual fund.
Okay. So okay.
Mutual fund la nariya type irukku.
Correct. Okay.
Adula vandu enadha description.
Yeah, I will again probably share the screen. Okay. So here you can see, okay, equity, okay, large cap, mid cap, small cap, and then you have a debt fund. Okay, so debt again has a lot of categories, and hybrid fund also I told. So again, before coming into this category, there is one more category that we should know, a broad category. See, direct and regular. Okay. So when you invest whether it is equity fund or debt fund or whatever may be, you need to choose whether it is a direct or regular fund. So what is direct? Direct is something you create. Say, for example, let us, for the discussion's sake, let us take ICICI Prudential Mutual Fund. So I want to buy some mutual fund from ICICI Prudential Mutual. So I go there, I go to the site and I create an account. Okay, I complete the KYC and then buy a mutual fund. Okay, this is direct. I directly go and buy the mutual fund. The next is regular. So what is regular? Regular is, okay, I don't go directly. Okay, I approach a broker or some advisor, mutual fund advisor. So he suggests me, okay, you can buy all these things. So he just gives his knowledge. Okay, he says that, okay, he has, because he's an expert compared to me. I am just a novice. Okay, so he's an expert. Probably advisors, mutual fund advisors, supposed to be certified by SEBI or the organization. So he will be holding a certificate. Okay, so and he advises because he has the knowledge, and he says that you buy these funds. Okay, so then after that, what he does is that, okay, he buys on behalf of you. So, so he is an intermediary between yourself and the mutual fund. Okay, so for his services, okay, we need to pay. He has to be paid. Okay, so the particular commission, the mutual fund will give the commission to this broker, okay, or advisor, whoever may be. Okay, so this probably this will be maybe 0.5% or 0.25% yearly. Okay, see, whatever the annual value or out of the NAV, 0.25% every year will be going to this particular person, okay, advisor or broker, whoever maybe is the intermediary. So, what is the disadvantage if you go through this one, or what are the advantages? Advantages probably, say, if he's an expert, so you're getting a better mutual fund, okay, rather than me, okay, doing a research, what is best, what is the better fund, all those kind of things. I approach a advisor and then I buy a mutual fund, okay. But the disadvantage here is that this 0.25% is eaten away every year, okay. 0.25, 0.3, it depends, okay. So if you just draw a graph, okay, so say, for example, you are sending let us we are sending a rocket from here, a satellite from here to moon. So if it is a direct, in case of direct mutual fund, so we are aiming for moon, and it goes to moon, okay. But in case of a regular one, so even the same fund, okay, even if you aim for moon, you won't land in moon. You will land somewhere else, okay. You will probably land down, okay. So it basically when it starts, okay, the curve, it starts in same line, okay, and it goes. Then after that, okay, because of this 0.25%, your return gets eaten away. So it changes track. So if you compare long term, then probably there is a huge difference, okay. This is about direct and a regular mutual fund. Then coming to actually the categories, as I have shared here, where there are large cap, large mid cap, debt, and even if you say debt, okay, there are a lot of things. Say long duration, medium to long duration, short duration, low duration, even bond funds, okay, mutual funds which are investing in bonds, okay, they are also there. Then there is another thing called as liquid fund. Okay, liquid fund is again another debt fund where it is kind of equivalent to a fixed deposit. Okay, so it gives equivalent to a fixed deposit one, but the advantage is that fixed deposit, you just say put 1 lakh, then you're locked kind of. Okay, if you withdraw, if it is for a 1 year period, okay, you put 1 lakh money in fixed deposit and you want to withdraw, then you may have to pay, premature withdrawal might incur some penalty. Okay, but in liquid fund it's not like that. Okay, so I put 1 lakh lakh in liquid fund, and in after 6 months I need there is some huge expense, some medical expense or something. So I want to withdraw money. So in fact, I want it immediately. So there is a provision in liquid fund. So where instant withdrawal, we can maximum do per day of 50,000 rupees, less than, okay, maximum 50,000 rupees. Say, for example, I want to take 20,000 rupees. I just go instant withdrawal, just redeem the money, then immediately, and the next second, it comes to my account. So that is only available in the liquid fund, okay? And then this is another, okay, these are all coming under the debt mutual fund. Then we have hybrid, okay, hybrid is again a balanced, conservative, so many, okay, equity savings. So all these things differ by percentage of, I mean, how much they will put money in equity. So that percentage, equity versus debt, okay, it differs in each, I mean, subdivision wise, okay. So then commodities probably gold, okay, there are funds which invest only in gold and which invest in silver. So these are the categories in mutual fund. Thank you.
Thank you, Natarajan. உங்களுக்கு அடுத்த கேள்வி சார். Shanks Chandrasekhar sir, he has posted.
Okay.
So stability of my portfolio suggestions.
Yeah.
So I am 78. So he sees age as a barrier.
Yeah.
So 78 la na enna pannalam? What is the stability of my portfolio nu kettukare? Okay. I think very valid answer, valid question.
Yeah. There is one kind of okay, again, when it comes to stability, we should not be investing in shares or equity related instruments, okay, especially considering the age, okay, because I mean, it will have wild swings definitely in the short term, okay. In the long term, it is going to create wealth, assuming that, okay, at least we have a decent portfolio with a decent or good stocks, okay. It is going to be a stable one in the long term, okay. In the short term, okay, there will be wild swing, and if somebody who's aged looking at this wild swing, for example, many might have got heart attack in March 2020, okay, or April 2020, definitely, because all our
heart attack la BP katama increase
yeah, 20-25%, I mean, instant, okay, it might have gone down. So when you're I mean older, then you should not choose that one. So that is a small kind of a thumb rule, okay. Say 100 minus your age, okay, that should be the equity component. Say, for example, if I am 40, okay, 100 minus 40, so 60. So 60, I can allocate 60% of my savings or my money into equity, okay. Rest 40 should be in debt only, debt and related or FD, whatever maybe, okay. So if somebody is 70, age of 70 means 70% it has to be in debt only, okay, debt and FD, whatever, okay, the instrument which are stable and which are not affected by the markets. The 30% only should be in the equity. So even 30% also you can relook, okay. I mean, really can I take, because the 30% also there will be a lot of swing, it can become zero also, okay. So compared to this statement, so depending on the age, okay, you can choose the portfolio, and equity is not going to be stable, but we should be aware of this fact. And better is anyway, I want to invest only in equity, then as you become older, better to stick to ETF or large cap, okay, because the swings will be very less compared to mid cap and small cap. So that is only, I mean, that's what I would do if I am as I get old.
Yeah, thank you, Natarajan. I think we must always see the age factor also. Yeah. Particularly நீங்க சொன்ன மாதிரி அந்த ஃபார்முலா வந்து நல்ல 100 minus age, yes, is equal to your percentage of equity exposure. Yeah, equity, yeah, மத்ததெல்லாம் டெப்ட்ல. Yes. So very nice, thank you, that was a very nice explanation. Next வந்து சண்முகம் சார் question, how to get started in equity investments. So இது எல்லாருக்கும் நிறைய பேருக்கு இருக்கு. In fact, younger generation must seriously look at this answer as it. In the context, I would like to share my own. When I was studying at PhD Tech and graduated, my own uncle was with MRF. ஸோ அவர் எம்ஆர்எஃப்ல வந்து நிறைய ஷேர்ஸ் வந்து எம்ப்ளாயிஸ்க்காக கொடுத்துட்டு இருந்தாங்க. அந்த டைம்ல ஒரு 75 rupeesக்கு, அதுக்கு 75 கூட கிடையாது, 35 to 45 rupees தான் அந்த ஷேர். ஸோ he was asking everybody in the family, நீங்க வாங்கிக்கோங்க, எனக்கு எம்ப்ளாயி ஷேர் இருக்கு, அப்படி இப்படின்னு சொல்லிட்டே இருந்தாரு. ஆனா nobody really got interested. நான் இன்ஜினியரிங் முடிச்சுட்டு வந்தோம்னா நான் கேட்டேன், பட் ஆனா we didn't have much money. அந்த டைம்ல வந்து I was drawing a pay scale of 1200 as a GATE scholar. அதுக்கப்புறம் முடிச்ச அப்புறம் 2000 அவ்வளவுதான் salary. பட் இருந்தாலும் ஒரு ஷேர் வாங்கியிருந்தா கூட இட் இஸ் வர்த் தி இதுன்னு நினைக்கிறேன். அப்போ ஒரு ஷேர் இப்போ நான் கால்குலேட் பண்ணேன், இட் ஹஸ் மல்டிபிள் க்ரோன். அதாவது வந்து அவங்க 1:1 அப்படின்னு ஷேர் கொடுத்து ஷேர்ஸும் வளர்ந்துருக்கு, வேல்யூ ஆஃப் த ஷேரும் வளர்ந்துருக்கு. இந்த மாதிரி ஷேர்ஸ் அந்த டைம்ல ஒரு 10 ஷேர் வாங்கியிருந்தா கூட இன்னைக்கு வந்து ஒரு 1000 ஷேர் ஆயிருக்கு. அந்த 1000க்கு மேலதான் இன்ஃபேக்ட். பட் அந்த 1000 ஷேரும் ஒரு ஷேரோட வேல்யூ 82,000 டுடேஸ் லெவல். So I must be around 82 lakhs rich. But unfortunately, we didn't. Long term, I mean, share long term gain. I mean, multiple gains. So thank you. And sir, Shanmugam sir, I think you can answer this. How to get started in equity investments, particularly for the younger generation or youngsters? They already know, but anyhow, நீங்க வந்து பாதை அது எப்படி?
I think he is referring how to get started. I mean, how to.
Delivan asked Aravindan.
So if I understand correctly, like how to open Demat account.
Correct. Okay. How to get started?
Yeah. So the first step is open a Demat and a trading account with any brokerage houses, ICICI Direct, Zerodha, Angel One, HDFC Direct, Upstocks. There are plenty available right now. Now the more popular right now is in Zerodha also, very less brokerage. They can submit the documents like PAN card, Aadhaar card, photos. It's all can be done within an hour. Like the KYC also now they are doing it in video format. All can be done within 1 hour max. So we can start investing just after 1 hour. So that's the technology upgradation happened in the recent days. So once you get started, like I always suggest to buy some few quantities of blue chip stocks and monitor how it behaves. And maybe some of the, and also if he is going to be a defensive investor, buy some blue chip stock with good dividend yield like Green Oil Corporation, Rural Electrification Corporation, ITC, Infosys, some Tata Group stocks. It's not my recommendations, but it's typically defensive investors prefers these kind of stocks. And never ever invest fully. I always tell that if you are planning to invest 1 lakh rupees, say split into 10, like 10K each, and pick up some 5 fundamentally good stocks. Maybe invest maximum 50K, and always be ready to buy. When it falls down, try to average, because you already done homework by selecting the good stocks. Good stock doesn't mean that it doesn't fall. So we should be prepared to buy additional shares when there is a big fall. That's how he can get started, and always hold some cash to to buy further fall. I principally hold some 30% cash. Always, market always gives an opportunity. Like never if breathe up, they has to breathe down. And for that we can follow some technical analysis rules, support and resistance format. When there is a support, you can buy more. When there is a resistance, you can sell some share and keep cash ready to buy further again. So if you do that way, definitely you can beat FD returns and also beat inflation. And if you don't have time, in the same Demat account, you can start buy mutual fund. We can use value research online. There 5-star rated funds are there with multi-cap stocks portfolio, where you can invest in a mutual fund. So that's how we can get started. Hope I have answered his question.
Yes, sir. ஸோ அடுத்தது வந்து உமா சங்கர் குப்புசாமி, அவரும் அதே தான் கேட்டிருக்காரு, தி நீட் பேசிக் பாயிண்ட்ஸ் சொல்லிட்டு. I don't know what he means.
I think
basic points. I think you have answered the same thing.
Yeah, it almost covers the same
okay
as previous question.
Yeah, next Giridhar Raj, 2008 BE automobile options trading பத்தி கேட்டிருக்காரு. Options trading என்ன options trading மட்டும் போட்டிருக்காரு. I think Natarajan sir, you can answer what is options trading. How we can go about it?
Yeah, options trading, or it comes under F&O, futures and options. Okay, that we say. So without knowledge, okay, one should never enter into this one. Okay, so future, especially futures. Okay, and these are sometimes referred to as. I mean, they are like WMD. Okay, they are weapons of mass destruction. Okay, so they are, because the moment, say for example, if I am the son of Warren Buffett, I can make sure that within 1 hour, okay, the entire wealth is destroyed if I trade in options, okay, options and futures and options, okay. I can make sure like that. So without any knowledge, okay, one should never venture into options, okay. And options are only for trading and not for investment, okay. So there are a lot of YouTube videos, okay, which are available where you can again lot of knowledge, and there are very big traders, okay. I follow in IT Jagan, and there are so many people. Okay, if you once you just search for some options, okay, basics, okay, there are a lot of videos that may come, so a person can look into or watch those videos to start something. And one piece of advice is that if you want to invest, I mean, if you want to enter into futures and options, just start with index options only, okay. Don't get into stock options, because you will lose money very quickly, okay. If say a person losing money in one month or 1 day, okay, that is a difference. So you can enter and lose your money in 1 month, okay, in index option. In stock option, probably in 1 day itself you can lose some money, and that's it. So you should be very, very careful. And greed is many enter into options thinking that he or she can become rich tomorrow, okay, next day. Okay, so that is very bad. I mean, I don't know from where many got this information, I'm not sure. And there are if you take traders, 95% of those, okay, who enter into F&O or options trading, they lose money, okay. Only 5% okay, win. So what is the difference between those 5% and 95%? The 5% have a lot of patience. Okay, they have strict rules. Okay, so even if the strategy is not good or bad, okay, they have certain rules. They have discipline. Okay, say if I lose, then I can maximum lose 1%, 2%. Okay, they have set of rules. The moment, okay, your loss becomes more than 2%, just get out of the trade. Okay, that is how they do. And with zero greed, okay, you should not have any greed. Okay, so only person with discipline and zero greed and then patience, okay, they can only win in options trading. And that's why 95% of the people, they lose money, lose heavily. Okay, and there are many I am following many traders who are very good in the national level. Okay, and at times they share a story where people have committed suicide. Okay, so because people I mean, some borrow money and trade in options. Okay, that is very, very bad. Okay, so you should never borrow money. And if you, I mean, if at all you want to trade, you should come and trade with one thing very clear, that okay, it is okay if I lose the entire capital. Okay, if that is the case, then you enter into trading. Without this particular thing, do not enter into options trading. And with zero knowledge, do not enter into options trading. That is not the place for you to get in. Instead, you get in, buy some stocks. Okay, that is also going to give good returns in future, say in long term. Okay, so please avoid option trading if you don't have the patience and the knowledge. Thank you.
Okay, maybe I will just add a few points in option trading. It's a derivative market. It's a, you don't need to put more money. Say for example, if you want to buy a Reliance share, okay, You predict that it goes up or it goes down. You can buy. CE buy means you predict that your Reliance share will go up. There will be a premium into it. There will be a lot size. Lot size multiplied by premium you have to pay. Okay. If your direction is good, your premium will go up and you will make money. If it is option buying, so if direction is goes wrong or if it is sideways, also you will lose money. The lot of decay money, premium decay will happen. There are Greeks, several options there. It's a lot of things are there. As Natarajan sir said, we should not get into that until you gain knowledge. Rather than going to stock specific, at least weekly Bank Nifty and Nifty 50, you can try with small quantity, small lot size with small amount until you get some better knowledge. Otherwise, it's again, it's a wealth of mass destruction. Okay, be very careful in that. Yeah.
Thank you, Shanmugam sir, for this rejoinder. Artha kelli ungalku dhaan. How do you value valuation of shares? I think Prasanna has asked this 1977 production. Okay. So how will you valuation of shares?
Correct. It's again good question. Like see, when you buy a stock, always you need to look at the valuation metrics. There are several metrics or ratios, valuation ratios are there. Say for example, price earning ratio, price to book value, price to sales, earning value versus EBITDA ratio, price to cash flow, market capital to sales. These are all several metrics which you can look at it in Screener in website, Ticker Tape website, Money Control website. Before buying that stock, better to look at these valuation ratios and invest in. Most predominant factor we normally every investor follow is PE ratio. Preferably less than 20 PE is good valuation stock. That means the company, for every 1 rupee making profit, you are ready to buy 20 rupees premium. So that is the layman information. So if you are, that means if you are making 1 rupee profit, nobody wants to give 50 rupees premium, right? But again, we cannot avoid 50 PE stocks. There are many. If you look at Adani stocks, there are PE ratios are 50, but still a lot of investors to pay that much premium to those companies. But it is a general rule, like less than 20 PE is a good stock to pick up. That is always not universal rule, like high PE stocks avoid. It is not like that. If there is a potential for growth, that stock also will grow. Yeah.
The next question is how to go with the trend. Natarajan sir, you can answer this.
Yeah. Okay. So trend means, okay, either bullish. I'm assuming that, okay, the person who's asked, okay, he wants to just buy something, and if it goes up, he wants to travel with the trend. Okay, so how do you know, okay, it is a trending stock or something like that? So so if you ask me, then you should have some knowledge of the charts. Okay, so let me tell you, let me share the screen quickly and just explain, what is, how do you okay, do. So this is Nifty, 1 hour chart. Okay, so here see, this is 1 hour chart, and this is a Nifty 50. Okay, and say this is Zerodha account that I have, so I can even show Nifty Bank. Okay, or feature, whatever. So, okay, this is how. So this is a trending. It's a trend. Okay, it goes up. Okay. So how do you know that? Okay, you need to add some indicators. You should know. Okay, what are all those indicators? So here I have added 21 EMA. Okay, EMA is moving average. Okay, so exponential moving average. So just to many, technical analysts, okay, they talk about EMA. Okay, so this is 21 EMA is normally people add. Okay, and so anything this particular this is the candles. Okay, the candle is above this 20 EMA, then it is kind of bullishness. Okay, so you buy the moment it crosses this one, you buy. Okay, and moment it crosses down like this, then you sell. Okay, and again it goes up, then you buy and do like so. This is 1 hour. Okay, if you even in long term, if you want to just follow the trend, then I change from 1 hour to 1 day. Say now you can see the 21-day EMA just this particular candle crossing. Okay, so I buy this stock and just keep on holding. So from July till at least October, okay, or till September, okay, if I have held on to, say, if this is Nifty Bank, okay, let us assume that Nifty Bank is a share, okay, a single share, look, let us assume like that. So from here to here, okay, this is, let us assume that, okay, this is the index at the time was around 33,500. Okay, so if I held on to this one, then when I exit here, 5,000. Okay, 5,000 is the profit. Okay, from 35,000 has become say 40,000. 40,000 or something like that. Okay, in September, that is in 2 or 3 months. Okay, it has given this particular profit. So this is how this is not the only way. There are many other ways. The one which I do or I follow, I'm just explaining. So this is the trend. And if you want to just capture the downward trend, again, see, this is the downward trend. Okay, so it just crossed here and then it was in a downward trend. Okay, and till this particular point it was down. Okay, and then again it went up. So the 21 EMA is one. Okay, where you can just catch the trend, but there is no guarantee that, okay, the moment it goes up, it has to be bullish or things like that. So in sideways market, okay, you cannot catch hold of the trend. It will go up, go down, go up. Say for example, this particular area, it goes down, then goes up, and then goes down, goes up. So really confusing, this particular area. There is no trend here. Okay, so these are all kind of sideways market. Okay, there are many times, okay, it happens like that. So this particular area, it's also kind of a sideways market. So this is sideways market. So where it is totally, the market is confused. Okay, so those are the times, okay, you will lose your money. Okay, so if you're able to enter at the right time when it crosses, especially at the low point, then if you catch a trend and move on, then you will make a good profit. Okay, so this is a trend. I assume that, okay, this I had answered the question. Thank you.
Yes, thank you, Natarajan sir. How to catch the bull என்ற மாதிரி சொல்லிருக்கீங்க ட்ரெண்ட் கால்குலேட் பண்றதுக்கு. பட் இது வந்து எல்லா ஷேர்ஸ்க்கும் இருக்கா?
ஆமாமா, இது I'm just given on very basic idea. Say same thing if I say Tata Motors or Infosys, everywhere, I mean, same thing. Okay, you should know what is the candle. Okay, what is the green candle means, what is the red candle means, and then what is this moving average. Okay, all these things all the brokers give. Okay, so just open the chart and then type search for the particular stock and take 1 day or 1 hour, or depending on whether you are a trader or you're investor. So investor here means any person who's holding a stock. So again, there is no hard and fast rule. Person who's holding a stock for more than 1 year, okay, we can call them as an investor. Anybody who's holding less than that, say even for 1 second or 1 minute, and say a trader, okay, buy and the next instant immediately, okay, they'll sell. Say there are jobbers, we call, okay, so where they punch in orders in thousands, lakhs, okay, and just for 5 paise, 10 paise profit, because their quantity is huge. So you're buying, say 10 lakh shares, and just a moment it crosses, say 10 paise, 15 paise, they'll sell. Okay, So those kind of people, they'll anything above 1 minute is long term for them. Okay, so they do like that. Okay, so in short, less than 1 year is a trader, and more than 1 year if you hold, then investor. So this is mainly for trading people use. Okay, for investment is comparatively easy. Okay, you just analyze the company, because we will use logic and a lot of our knowledge, and but in trading it is different. Emotion comes into picture, so you should control the emotion. Thank you. Sir, you're muted, I think.
Yeah, now am I audible?
Yeah.
Yeah, wealth creation through investment in stocks. I think Jagadish from Coimbatore, he has asked 2008 batch, how to create wealth through investment in stocks. I think we have answered partly.
Yeah.
Sir, Shanmugam sir, you would like to, Natarajan sir, you would like to add something?
So we already discussed. So wealth creation means you can create wealth only in long term. For short term, it is not possible.
Not possible.
You should have patience.
The wealth in the term on the long term.
Yes. Correct. So like for
the profit.
நீங்க ஒரு 2 questions முன்னாடி நீங்களே சொன்னீங்க, like MRF. So I don't know, your uncle is still holding or not, I'm not sure. So okay. So if somebody has held on to this one, but nobody, at least and so far I am not following many people in trading as well as investment, but I have not seen somebody holding a stock for say 10 years 20 years like that. So if somebody is holding, then that is wealth creation. So very difficult, people may not hold. So you hold the good stock for long term, that is wealth creation.
Thank you. So next question, how to assess and find in which company to invest? I think Madhimurugan 1989 batch. Shanmugam sir, can you add?
How can you repeat the question, sir, once again?
How to assess and find in which company to invest?
Okay.
Madhimurugan sir has asked.
Okay. First, you have decided to invest in a company means first to understand the company first. Okay, what they are doing, which business they are into it. It's very important that you understand the company which you intend to invest. Like, if you don't know what they are doing, it doesn't make sense, owning that business, right? And understand that company, study the financial reports of that company, check the my previous fundamental checks like debt equity ratio and valuation ratio, cash reserve, EPS, cash flow from operations activity, and their company competitors, future prospects. All these aspects we have to review time to time. Once you are convinced, then put your portion of money into it and always hold cash to buy further fall if it comes. So that's how you have to start. Understand the company, study the financial reports, balance sheet, annual report, growth prospects, review, and then start investing it. That's how you have to assess a company before investing. That is the homework you have to do.
So next question, SIP and index investment. Natarajan sir, the question.
Okay.
What is SIP? I think he wants to ask. Okay. Lakshmi Kumar Ponusamy, 2019 metallurgy. He seems to be a very young investor.
Okay. Anyway, it's a good question, and in fact, it is a welcome sight that young people are coming into investing, or they want to just move towards it. And at young age, I would suggest you put a lot of money into equity funds and you start investing. So again, we should not be putting a lump sum. So then how do you do that? Okay, so that is where SIP comes. Okay, SIP is generally, this particular term is systematic investment plan. Okay, so where you route your investment systematically, say every month or every 15 days, every 1 week or something like that. So you can create that frequency, and also for how long you should, do I want to invest eternally, or do I want to invest money for next 10 years? So everything you can just configure while investing in a mutual fund. So that is the SIP. And normally, say, for example, many people say they get bonus. Okay, say a company announces bonus. Say somebody gets 2 lakhs or 3 lakhs, something like that. So then the question is, should I move? I have 2 lakhs or 3 lakhs. Okay, it will be lying idly in my bank account. So what do I do? Should I even if I put it in SIP, again, it is going to take only, say, every month, say 5,000, 10,000, like that. So till the complete investment is done, so it is going to remain idle. So, or it will earn very less, money in savings account. So even sometimes, if the money is there, then I might probably take it out. Okay, because suddenly an expense might come, and so what do I do? So if that is the case, what my suggestion would be, just move that lump sum money and invest in, say, liquid fund. Okay. So you have 2 or 3 lakhs, just you can do lump sum investment in a liquid fund, and then from there, systematic transfer plan. Okay, like SIP is systematic investment plan. This is systematic transfer plan. You are transferring a part of money, say 5,000 every month, or every 15 days, or every week, or something like that, or even every day. Okay, from this particular fund to a equity fund. So you do it till this is over. So what is the advantage is that during that period, okay, where your investment, it will not be lying idly. It will be earning some money. Okay, say liquid fund might give a better return compared to your FD or savings bank account. So your FD might give 5.5%. So this might give, say, 5.6 or 6% at least. So you can just move the money into liquid fund, and from there you just transfer money using systematic transfer plan instead of SIP from your bank account. Okay, you learn some little extra investment, returns using this one. Yeah, that's it. Thank you.
Thank you, Natarajan. Next is ETF best way for long-term investment? ETF,
yeah, exchange traded fund, ETF, exchange traded fund. So normally in here in Indian markets, okay, ETFs, you have index. It is based on index. Say, for example, Nifty index, we say that an index, okay, it's a number. Okay, so then that number comprises of the market cap and other. There is some calculation involved, okay, which you can Google and see. So this Nifty 50 we call, okay, Nifty 50 is what form this index. Okay, so there are some proportions, okay, which you can Google. So exchange traded fund, what they do is that you give 100 rupees, or you invest, you buy one ETF for 100 rupees. Okay, that 100 rupees is split according in the same proportion as the index is formed. Okay, say for example, Infosys will have some 10% weightage on index. So your 100 will be given the same weightage, and Infosys, a part of Infosys would be bought. Okay. Say, let us assume that you can, instead of buying one stock, you are allowed to buy even 0.2, 20% of the stock, 10% of the stock. Then your ETF will buy 10% of Infosys, and say next 5%, you say TCS will have a weightage in the index. So it will buy 5% of TCS, like that. So your 100 rupees would be split like this, and it will be invested. So it is called Nifty Bs. Okay, and then there is another thing called as Bank Bs. So Bank Bs, again, it follow Nifty Bank index values. Then there is a Nifty Junior Bs. Okay, so junior, like Nifty 50 is large cap. Okay, and Nifty Junior is junior cap or junior index. So which is, I think, probably 100 or 500 something. Exactly, I don't know. So for all these index, you want to invest in this index. Okay, then you can use this ETF to invest here. So the movement of ETF will be in tandem with Nifty movement. Say for example, if I buy a Nifty 50 ETF, Nifty Junior B, Nifty Bs, if the index tomorrow Nifty 50 is going up by 2%, then this ETF value will also increase by 2%. Say day after tomorrow it goes down by 1%, then the Nifty ETF value will also go down by 1%. So it moves, it just follows Nifty. So this is the exchange traded fund, and here the advantage is that compared to mutual fund, the administrative charges and all those charges are very less. So your returns are better compared to larger caps sometimes. But then returns are equivalent to what a Nifty would give, or what Nifty Bank would give, or what a Nifty Junior Index would give. It is traded in the market, in the index.
Yes, sir. Thank you, Natarajan sir, for that wonderful explanation. Next, we have equity investment strategies. Shanmugam sir, strategy or a plan of action. So, without strategy, invest
I think if I understand it correctly, I'm not sure this is what he means. There are investment strategies like value investing approach and growth investing approach. This is the typically normally they call it. Value investing, like you feel that it's trading less than their intrinsic value. The market is underestimating those shares. It's trading less than compared to their potential. Then those stocks are called value investing stocks. Typically, the market, with my own eyes, I have seen that value investing, at least in India, did not give bigger returns compared to the growth investing. The companies growing quarter on quarter, year on year, gives better returns than value investing. The defensive investors will try to choose value investing principle, but some aggressive investors they prefer to pick up growth investment stocks. Maybe Natarajan sir can add some of his thoughts.
Yeah, true. Like as you said, value investing is a tricky one. Because how do I know, or who decides the value? Because one person will say that this is a low value. I might feel that it is not low value. So PE may not be sometimes the right indicator to just check the value. So it's a debatable one. How do you decide value? So, but growth means this is it's growing every quarter. Wise it is going, so probably you want to take part in that growth story. So assuming that, say for example, a company, some share or some company is declaring some good results. Say every quarter there is at least 1 or 2% profit improvement and the revenue improvement is there. Then probably you can analyze that and you can buy that company and expecting that the same thing would be followed in future also. But there is no guarantee. But in value, I don't know, like we choose something, you need to be very, very patient, and so you choose some stock and buy some stock thinking that it is of good value, then finally it never moves. So that happens.
Yes.
Sir, thank you, Natarajan sir. Next is my video is not coming, but doesn't matter. I think voice is audible.
Okay, yeah.
Yeah, next question is expecting a major correction because of recession. Is it correct? Natarajan sir, I think what he sees is a major correction.
It is best, yeah. Then we should be prepared with money. I mean, don't put money. I mean, right now, yeah, at market at 18,000. Personally, I would not put money right now. Okay, I might do some index options trading. That is a different thing. But I mean, just a few days back or something like that, people were predicting that because rupee is, it's getting devalued, so it is going to crash. All those kind of stories. They were just spreading, and in fact I was waiting for the opportunity. Is it going to go down below 17,000 17K. If market had go down below 17K, then I might have purchased a few stocks. Okay, that did not happen and did not even come near 17,000. Okay, so so it is going up only. So there is no recession and all. Let us see later. Okay, if a recession comes, then keep some money and invest. And any fall, okay, use that as an opportunity to buy. Because if you buy at 18,000, probably you will not be making money. Like after 18,000, can the market move further? We don't know, because with the kind of crisis, currency and say Ukraine issues, and UK is in big trouble, and US also inflation is there, and there is a threat of again further rate rise. So with all these factors in mind, I'm not sure market can go past 18,000 and things like that. But if it falls below 17,000, then I would personally buy a lot of shares, because it is not going to go down. Okay, let us be very, very clear. And the future, in fact, is going to be India only. So India is going to grow in a tremendous way. So anybody who's pessimistic, who's not believing this India story, make sure that they propagate this story so that market falls and let us buy. So that is what I would suggest. So wait for the opportunity patiently, and do not jump in and buy the stock right now, because right now we don't know. But if it goes below, if the Nifty goes below 17,000 and market falls because of global factor, okay, not a stock specific or some specific factor related to India. So for the global factor, market falls, then just buy. That's it.
Once again, thank you, sir. I think this has to be seen as his own opinion. The opinion judge panikadinga.
Correct.
Because Natarajan sir also is learning, and we are all into investing in our own way. So, but it is his opinion that India has a growth story to play, and we all can invest safely and see the profits. So, அடுத்த 3 question Shanmugam sir தான். So, what he has asked, first how to be patient enough after we invest in good stock. இது Vijay Bhaskar கேட்டிருக்காரு. அப்புறம் தங்கம் sir, he is asking how to know the right time of buying and selling a script. அது ஏற்கனவே கொஞ்சம் டிஸ்கஸ் பண்ணிட்டோம். நெக்ஸ்ட் தேவராஜ் சார் கேட்டிருக்காரு, forecast for 2023. I think இது ஆல்ரெடி சொல்லியாச்சு. It's a growth story. 23 will be very, very fine year in spite of the recession outside the country. In fact, we are more resilient than the European and other markets, the Tokyo, Southeast markets, US markets, Europe markets. அவங்க விழும்போது நம்ம ரொம்ப கீழே விழுறது இல்லை. We are very resilient as a market. So Shanmugam sir, can you add on these 3 questions?
First I will go with how to be patient enough while investing in good stock. Like it's one individual has to feel like my experience may not suit others. One has to through their investment journey they have to feel and experience. But some of my thoughts with my own investment journey, like don't get carried away with avoid noises, avoid social media distractions, because already you have done good homework research. Then after that only you have invested. Then show your patience. Okay, have some cash to buy some more stocks, because you already decided it is a good stock. Unless there is a big trouble with respect to the management, corporate governance, or some of the issues, or big negative surprise comes, then get out. Otherwise, show your patience. Don't speculate. Try to calculate how they will come back. Like that you have to look at it. And also always you have to diversify your portfolio. Don't concentrate your portfolio. Sudden fall comes, the drawdown number will be so high, that makes you impatient, right? And also if you see that that has good potential, don't book profit in very hasty way. Also hold your passion and have a plan for long term. And also you have to have some target. At this target price comes, I want to get out with some portion of money. Look for some other opportunity to buy when you get some other opportunity, try to put this profit into some other equity. Volatility always there. Market without volatility, that's not equity market, right? So we have to understand the volatility of the market, and we have to our mindset should be like, to accept that volatility. Otherwise, equity is not the right option for you. Yeah, if you show a long term, definitely time is on our side. You can create a lot of wealth. Patience always pays. That's my own experience. I made a lot of losses during my beginning of my journey, but later on, then when I did proper homework, and then I picked up many multi-bagger stocks. So that's what I can share my experience. And coming to the right time of buying and selling, am I right, sir? Okay, I think I correct. So when to buy a stock, like means when when a stock goes on sale, discount sale, like we look for the Diwali sale, Adi sale, like big discount sale for good stocks happen. That is the right time to buy. If you feel that it is undervalued, you can go for buying. And also always you have done with your own homework on that particular stock, yes, you can go for buying. Coming to the selling part, it's again when you see that I bought a wrong stock, then you get out. And whenever there is a big jump in price, you get 10%, 15% rise, definitely 1 or 2 days after that it will come down. So if you feel that 10, 15% rise, you sell your portion of your stock and wait for fall, and then you start buying. And when you fixed your target, then you can sell it, of course. And you think that if the company fundamentals are deteriorating, it is losing market share, its growth potential becoming bleak, all these things, you can get out. And always you see some bad news about the company in a big, you can sell, and then again when it comes down again you can buy. And if you feel like the market is so wobble, you can sell some share and hold some cash. You can buy it at a lower level as well. And whenever you get, as I said, whenever you get some better investment opportunity, you can sell some of your profitable stocks and shift your to some other stocks. Yeah, that is my answer.
Yes, sir. Thank you.
And the forecast for 23, yes, Natarajan sir explained already. And I in my view, like I don't look at by year-wise forecast. I look at stock specific approach. Might be right or wrong, I'm not sure, but the failure rate will be will be less if you go with the stock specific approach, because you have done the homework. This is going to grow. This is going to grow their business. The management is good, and outlook for next year is better. They have made an expansion. They have the cash. They are going to diversify their business. Their sales and revenue and profit is going to increase. Then you don't need to look at year-wise outlook. You look at the stock specific approach. This is going to perform well in the coming quarter and year. Then put your money into that. Okay. Sometimes outlook for year may not be good, but if the stock can outperform well, if both are good, then you are lucky. Like year outlook also good, and your stock specific outlook also good, you will get a phenomenal return. So of course you look at the year-wise forecast, but rather than you look at the stock specific approach. Yes. Dina sir, you can go to next question.
Sir, unmute agala, some problem in this. Okay, sir. Next, question is for Natarajan. To understand various type of investments, so I think we have already answered either V 1984 triple E. But we have already how to buy index funds, invest in options. But the next question is very important. What is the recommended proportion of investment in FD and mutual fund in the current scenario? Sendil Kumar, 1993 triple E. FD mutual fund current scenario. It's very I don't know what is his appetite and what is the time frame he is seeing.
Correct. So again,
next 5 years
so we already we just touched upon this one, like 100 minus your age, so we can use it for allocation into various assets, say equity and debt. So so if you talk about FD, I'm assuming that it is debt. Okay, so where you want money to be stable, at least your capital erosion should not be there. Okay, that is the aim. Okay, though FD, there's a chance that okay, it can you can only get a maximum, as I mentioned. Even if I put 1 crore, if the bank goes bust, then you will get only 5 lakhs. But so far in the history of India, it has not happened. Even though banks have gone bankrupt, and there are Global Trust Bank and so many other recent banks also. But RBI and the government make sure that okay, you will not get the money immediately, but there will be some short hiccups. But you will get your money. You won't be losing the money. Okay, at least in the history, it has shown that okay, you won't be losing the money in FD. So let us assume that FD is the safest instrument. So depending on your age, okay, you put money in FD. Okay, or if debt fund, okay, more allocation towards debt fund if as you grow. Okay, and MF, I'm not sure. Mutual fund also, again, you can categorize it into equity or debt mutual fund. So I am assuming that okay, your question was how much that I can put in equity and how much that I can put in debt. Okay, which is a stable or at least low capital erosion. So it depends on the age. We already said the formula 100 minus your age, and you allocate accordingly. And so in when you talk about debt fund, as I mentioned, there are many avenues available. It is not only the FD. There are other alternate investments. Other than mutual fund, you have this senior secured bond. You can go through a website called Vint Wealth. Okay, where senior secured bonds, they come up with senior secured bonds, which gives return of up to 11.5%, 11%. Okay, the money is compared to FD, it is not so safe compared to FD, but it is relatively safe. Okay, and then there is another thing called as invoice discounting. Okay, so there's a site called Trade Grid. So where you can just create an account, finish all the KYC, everything, and you can invest amount. So what is invoice discounting? Say a vendor who supplies material to say ITC or very big Amazon or big companies. So okay, so they supply the goods, and they give the invoice to get the money. So normally, I think in India or even nowadays in world, okay, so you won't get the money next day. It will take at least 30 days to 3 months. Okay, 1 to 3 months. Okay, so but as a vendor, I want immediate money. Okay, because for money circulation. So what I do is that instead I give this invoice to third party, and the third party, looking at the value, he lends the money at some and he charges some interest rate, and this third party, he gives this invoice to Amazon or ITs or whoever maybe. Okay, so this money given by this third party is the money that general public they invest. Okay, so Trade Cred is that third party. Okay, so the invoice the vendor gets paid, but he has to it is basically a loan kind of thing. So he has to repay with some higher interest. Okay, but the advantage is that the person gets immediate money, and he uses and he generates a lot of profit with that money. So that is the basic idea. So that is, this is again, after the senior secure bond, it's not as safe as senior secure bond. It is a little riskier. So it moves, I mean, again, up the ladder. Okay. So this is the invoice discounting. So these are the alternate investments. With these two things, I think probably you can get 11%, 11.5% kind of return. Okay. But you should not be putting more than, say, 50. I mean, I am investing in all these things. I don't put more than 50K in these things. Okay. So you should be careful also, because in FD, government banks, but here, okay, though there are a lot of legally it is bad, and even if the person defaults or the vendor defaults or he becomes bankrupt, you will get money, because from Amazon the money is directly routed to you. But still, okay, we should not be putting more than 50K or something in one such instruments. Okay, so this is that one. And then after that, okay, it is equity and related investments in or ETFs. Okay, so these are the various avenues one can look at it. Thank you. So, Dina sir. Dina sir, are you there?
Probably.
I've been muting Dina sir because of the background noise, but I think Dina sir, can you unmute yourself and talk, please?
I think, is there any other questions? I'm not sure if he's Shanmugam,
we can go with other next question. In equity, what are the main criteria to choose the right shares? I think we discussed already. We have to look at the fundamental aspects, less debt cash ratio, ROC, ROE, earning per share, P ratio. These are all the factors we discussed about it. And other factors which we also talked about is expansion potential, ability to gain market share, good management, liquidity, promoter pledge. These are all the factors we have to look at it while selecting the right share. And one question I want to know about fundamentals. It's almost same as the previous question. Same fundamental ratios you have to look at it.
Yes.
Okay, sir. Go ahead, sir. Dina, sir.
Sir, yeah, we have one few questions. They are already 8, 10, I'd say.
Okay.
So I think some questions have already been answered.
Yeah.
So shall we go directly to the question and answer session? I think all the questions, I mean, already questions are answered. Question and answers or 10 question vandirukku. I think at least we can take 2 or 3 questions because the time is very short.
Yeah.
And then we'll
take 3 questions.
Yeah, I think we are already overshooting on the time. So I would suggest that we take it up and
WhatsApp group le potrala. We can
WhatsApp group la adhe mari podradhu better nu thonudhu because we are running out of time.
Yeah.
If that is okay with Natarajan and Shanmugam.
Sure.
Yes.
Yeah.
Okay, then we'll wind up. I think vote of thanks, Ratna sir. Can you add a few lines?
Sure. First of all, would like to thank all the participants who came in today and were listening to the expert advice from Natarajan and Shanmugam. See, the overall idea of Chennai chapter is to ensure that we have more people who join the different forums that we have, and Natarajan and Shanmugam have been spearheading the equity group, and they have made many alumni rich. Of course, they keep talking about disclaimer and they are novice, but that's only a reflection of their humility in terms of trying to express what they are doing, but they are actually great experts. And on behalf of the EC and the Chennai chapter and everyone, we'd like to thank them for spending the time with us. In fact, Shanmugam and Natarajan were reluctant, but I think it is definitely a great show in terms of sharing their ideas and how to go about investing on different asset class, and also, life lessons in terms of being patient and not rushing to make money tomorrow, because nothing comes without a risk. And Natarajan kept mentioning about how there's nothing called risk free, right? ரஸ்க் சாப்பிட்றது மட்டும் தான் ரிஸ்க் ஃப்ரீயா இருக்கும்னு நினைக்கிறேன். மற்ற எல்லாமே ரிஸ்க் தான் லைஃப்ல அப்படிங்கிறதையும். ஸோ பேசிக்கலி he kept talking about the life lessons in terms of having lots of analogies in terms of how investments should be taken up at a very young age and how people can benefit from that. So typically, I mean, just to reiterate on what Shanmugam sir and Natarajan sir said, the idea of making money itself is to leverage, right? Leverage big time. So one of the alumni from Makeup Studio பேசினாரு, leveraging the alumni network அப்படின்னு சொல்லிட்டு. So you either leverage on the human capital, run business, or you leverage on the capital that's available or resources that's available, or you currently it is a content creation and IP creation, adile the leverage pannalam. So today we spoke about more leveraging on the capital and the equity market and the investment, and we would continue to do more such events. We're looking forward to all your support, and finally thanks Dina sir. I know he got stuck with some party, but he was trying to hold both the party and this event as well. So adukku romba nandri. And finally, thank Ravi Kumar from Car Technologies, who have been supporting in terms of driving this webinar, and the whole EC team, Febin Madam, ellarkum periya nandrigal therithukkolren. So we're looking forward. We want more people. We would definitely broadcast this in YouTube. We are looking forward to more people to subscribe to our alumni chapter, Chennai chapter, and make this a great success. And thank you very much, and happy investing. Looking forward to meeting you in the next event. Thank you all.
Thank you, Ratna.
Sir,
thank you
for the
all
opportunity to share our insights. Thank you, sir.
Thank you all the experts. And Karthik, we recommend and we look forward for IPO of Karthik. So I thank Ratna as a part of the Karthik. They are helping us in Alumni Association, spearheading the activities. So we have a lot of investor base, PSG Tech alumni. Many of them are there. Many of them are very silent as Shanmugam and Natarajan. So I think this is the right forum, and we look forward for all of our strength to come together, and let us share knowledge, share experience, share investing thoughts, and be rich, and share this richness with the society at large. Thank you all for joining, and we look forward for your continued cooperation and communications. Thank you all. Bye.
Thank you all for
Bye, sir.
joining.
Bye.
Thank you so much.
Thank you.